Financial Focus brought to you by the best of the best in financial services, as named by the readers of the Lake City Reporter, 9 straight years and running. The team from GulfCoast Financial Services celebrating more than 31. It's got to be closing in on 32 years at least, John. It feels like just yesterday that you formed the company, but starting to help those proactive North Central Florida savers and investors formulate the financial, investment, and retirement plans to achieve and accomplish their goals.
Yeah, Pete, I think it's 31 years and 11 months. So we're pretty close, and we're looking forward to the big 3-2. It seems like yesterday that we started this, and I can tell you that, the work that we do now is so much different from what we used to do compared to the software, the technology, the computers, just everything that we have available to us and everything that we know is so much different than it used to be.
Well, John, a big part of helping people formulate those plans is education, helping people better understand their money and the tools that we have access to. And there are different kinds of financial and investment tools, and in fact, different locations that we can place our money that have different purposes. And I know that you really strive a personal understanding of what each dollar and each investment is doing for your clients there. And part of that is just educating us on those different investment options and what we have access to.
Well, that's what we try to do. We try to make people understand that there are different options and that, really the options are for different purposes. There's not one solution that fits every client, not one solution that fits every problem. And we always take into consideration the taxes and everything that's going to impact them as they go forward. And so we really try to do a really good job of education anytime we talk to a client. And, Peter, a lot of people, especially now as rates have gone up a little bit, they're wanting to put their money at the bank. And being an ex-banker, I got to tell you that we loved that because we take your money and we loan it and we make more money. And that's the way
when you were at the bank, when you were at the bank
when I was
previously.
at the bank, yeah.
And not that you think that's a bad thing now to have some there, right? I mean, I'm not trying to put word. I just want to emphasize and stress. You said that as the former life at the bank, you really loved that, right?
I did. In my former life, that was great. As our deposits increased, we were able to loan more money. We were able to make an arbitrage between the interest rates we charged and the interest rates we paid. And that's the way that banks make their money is, they can't afford to pay a high market rate like the market because of the fact that they have to loan that money out and they have overhead and rent and employees and everything else that takes place that is accountable to them. So when we look at money, we want to have some money at the bank because we need to have liquid assets that we can use. And so when we say liquid, it's, I like to have 6 months in reserve that I know that I can get my hands on that's going to cover me in the event of an emergency, in the event of anything that comes along that's unforeseen. But I don't want to have all of that money in my checking account. Checking accounts are liquid, but they pay low interest rates. So what we have to do is look at the other alternatives for banks, which are CDs, which pay a higher rate, usually a longer term, or either a savings account, which doesn't pay quite as much as CDs usually, but is totally liquid anytime the client wants it.
You stressed the liquidity factor at the bank. And I know that the safety factor, we know that the market's not going to disappear dollars that we haven't taken out to spend personally is another big factor in quality at the bank. There are reasons why it is absolutely necessary to have some money in the bank. But you also, you mentioned the liquidity there. John, that's a double-edged sword at this point in time, right? Because generally, we don't want to have our money sort of locked in for a long period of time. But right now, with where interest rates are, it could also be beneficial to have an interest rate locked in for a little longer period of time, correct?
That's correct, Peter. But we got to remember that even if we can get 5 or 6% at the bank, that inflation's 3.1% on the latest poll. So, I've already lost 3%, 3.1% of my money. So at 6%, I'm making 2.9%. So I want to make sure that I have liquidity, but I don't want to have all of my money tied up in interest rates at the bank.
So again, important to consider what the purpose of the dollars are for at each location to determine how much is appropriate, right, John?
That's right. I mean, the thing is, Peter, every time I went and got my wife a Valentine card today. I mean, I thought that would be really nice to go buy a card.
Good work.
Yeah, it was. But Peter, the card was over $8. I mean, and it wasn't that nice a card. It was a small card. I couldn't really find one I wanted. But those we used to buy those for $2, and now we're paying $8. So as things continue to increase in price, and they're going to, then we have to make sure that we don't lose the opportunity cost of having our money invested in different options, different investments that are maybe going to give us a higher return.
And those options, John, we need to understand those as well. So after we've got the appropriate money in the bank for safety and for liquidity, where do we turn next in order to try to keep up with that growth potential that inflation is eating away?
Well, for one thing, Peter, if we're looking at doing retirement, we want to look at the income plan. And so I want to know what my gap is. How much money do I have coming in each month that's guaranteed? And how much money do I have to make up out of my investments? And so I'm going to be looking for an annuity that's going to give me guaranteed income from the insurance company that's going to pay me a check every month as long as I live so that I can make sure that I have enough money to live on. After that, Peter, then I'm going to put my money in the growth bucket, and I'm probably going to go into the stock market and buy mutual funds or ETFs, exchange traded funds that are like stocks, but they're made up of mini stocks. So it gives me a little better hedge on the market than if I bought one stock.
And again, John, this is important where people need to understand the pros and cons, the qualities of an investment option, depending on where they are placing it. There is a difference between mutual funds and ETFs that is very important for investors, especially in non-retirement accounts, just investment accounts to understand, right?
Well, that's true, Peter, because with a exchange traded fund, I'm not going to have the dividends and capital gains paid until I sell. So it's not like with a mutual fund every year they're distributing capital gains and dividends, which could create a tax problem for me or make me pay higher taxes. The other thing, Peter, is that with an exchange traded fund, I've got cheaper funds, it's cheaper expenses, and I can sell that fund anytime during the day. So if I need cash or liquidity, I can sell that fund. It trades just like a stock. Whereas with a mutual fund, it's going to be whatever the market closed at 4 o'clock that day. I can trade and get that price, but I can't trade it early. So if the market was really going off, I would have to wait till 4 o'clock to get the trade done.
And then, John, wherever we place our money, we also need to understand the tax status. You've emphasized that many times on the program.
Oh yeah, Peter, we really are concerned about taxes and what happens to the client if they do certain things. And so we need to take into consideration the taxes on all those and how it's going to affect the clients. And we do something called tax harvesting. So we will look before the end of the year and find out what a mutual fund is going to pay in capital gains and dividends. And we may sell that fund before the end of the year, take our gains in the actual profit, but not have to pay the capital gains and dividends.
Well, on this program, we've addressed some of the different investment options. And ladies and gentlemen, always important for you to understand the pros, the cons, the qualities, and how your money will operate if you select a certain place or type of fund or investment option in order to utilize in your financial progress. And John, your team there at GulfCoast Financial Services, we covered just a high level of a brief few of those investment options, but you always dig in and try to make sure that clients of Gulf Coast Financial Services have the plan that helps them dictate which would be the appropriate choices, and then understands fully the qualities of those choices and what to expect out of them.
We're going to educate them on each product, each instrument, and explain to them what they're doing. There's a strong possibility right now that people want to buy bonds because interest rates are up. But you have to understand that when you buy a bond, if you buy a regular bond, you're going to have to hold that to maturity. Interest rates can go down, the bond price fluctuates with interest, so you may not be able to get the liquidity you want. And the longer the bond, the higher the interest rate, but the more interest rate risk you're taking yourself. So we want clients to understand that and be able to anticipate it. If that's what they want, we're more than happy to help them with that. But we want them to make sure they understand the implications and the problems that happen with different instruments. There's so many out there, Peter. There's so many ways that we can invest our money, but there are also so many ways that we can do it smartly. And so that's what we're all about, is trying to do the best financial plan, the best income plan that we can do for our clients.
Well, if you would like to get that financially focused written retirement income plan, or if you'd like to get the book in your hands by our host, John Kuykendall, founder at Gulf Coast Financial Services, the book is Quitting is for Winners, but Retirement is Not for Wimps. And it outlines many of the challenges as well as some of the solutions to the challenges in our modern retirement planning, or again, your specific individual custom design, written, financially focused retirement income plan. Pick up the phone, give a call, 386-755-9018, 386-755-9018, or stop by the office there at Gulf Coast Financial Services. They're always happy to see you, and whether it's a new or familiar face in their more than 31 years, closing in on 32 years and serving North Central Florida savers and investors, always there as a resource to help, ladies and gentlemen, with your money and planning and financial progress. John, always a pleasure to have you here on the program.
Thank you, Peter. It was great to be here. See you next week. Hey, if you'd like a copy of our new book, Quitting is for Winners, but Retirement's Not for Wimps, I encourage you to click the link below and get your copy today. Hey, we like it when you listen to the show, but we like it better when you like, share, subscribe, or feel free to leave a comment.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities, Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services, Inc., a registered investment advisor in Florida. Gulf Coast Financial Services, Inc. is not affiliated with Kovac Securities, Inc. or Kovac Advisors, Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors, including changing market conditions and/or applications